Are offset accounts in Australia actually worthwhile, or are they in fact just a waste of money? Hi, Jarrad Brown here, Aussie expat financial planner based here in Singapore. Let's look at a simple example because this is where a lot of people get confused and aren't quite sure which option to opt for. So let's just say that you've got a loan. Now the balance doesn't particularly matter in this example, but let's assume you've got a loan of $500,000 just to keep the maths nice and simple. You've got an offset account attached to that loan. Now an offset account means that every dollar you have in that offset account typically will reduce the loan balance by $1 in terms of the interest you're actually charged. Now that offset account, to have that offset account rather, most lenders will charge you what they call an annual package fee, and that will usually be about $395. So let's work out if an offset account is actually worthwhile. Now it really comes down to how much you expect to have saved in that offset account and what your tax planning looks like going forward. So let's assume that we only have $10,000 in that offset account. So that $10,000 sits in the bank account, reducing the loan balance on which we pay interest. Now, if we assume that the interest rate is 5.5%, which is about fair in this market, even factoring in the latest June rate increase from the RBA, then that $10,000 is saving us $550, 5.5%, of interest each calendar year or each financial year. Now, to earn the privilege, we paid $395 and we saved $550. Sounds pretty good so far. However, what we then need to factor in is the fact that by offsetting more interest, we are reducing our tax deductions. So if we assume that we would use those tax losses in future, that is the interest that we paid, at an annual tax rate of, let's assume 30%. So we can't quite know exactly what our future income would look like in Australia, or even what tax rates would be. But if we use 30%, that gives us a bit of a line in the sand. So that $550 that we have earned as an offset or saved in interest, taking off the 30% means that that money we've actually earned is closer to $380 because we're taking off the lost tax benefits. So make sure you're doing your maths very carefully here because again, in this example, if we only have $10,000 in the offset, we've actually lost money and we would have been better off putting that $10,000 somewhere else in a savings account, putting it in super or shares or somewhere else and not paying for that package. So tread with caution, run your numbers and work out what's right for you and drop me a note with any questions, but thank you for tuning in.